Hello future and fellow investors, it's Mike with DiamondHands StockPicks. Welcome back to another episode. This one here is just to say congratulations. If you held on the last couple of weeks, didn't sell all your stock, didn't panic, took my advice, maybe turned on the TV, stayed away from staring at your phone or your computer screen, or if you were looking at your stocks, you were buying more because you believed in the company and you knew that they were undervalued at those prices. Congratulations is in order. That's exactly what you're supposed to be doing. The stock market's red, you don't have any money to invest, don't bother looking at it. Don't panic, don't sell all your stuff when it's low. You're just going to lose money and the stock market's going to eat you alive. If you sat back and looked at some of the stocks you had that you believed in, that you loved, that you did all your research on, and you knew they were just too cheap, and you couldn't stand it, you had to buy more, you're going to do great in the stock market. You are setting yourself up for a lot of wins in the future. You're going to be doing just fine. And for those of you that did hold on strong and buy more on the dip, or just not bother looking at it, give yourselves a round of applause. You guys did great. That's how you're supposed to be doing. And I'm very proud of all of you that held on. If you did panic sell, well then kind of let that be a lesson to you. Hopefully you didn't, but I'm sure a lot of people did. But that should be a hard learning lesson, because what I'm going to explain to you in this video is that it's natural for sell-offs, it's natural for corrections. When natural disasters happen, it's natural to have a market crash. I don't think we're in a market crash. I think it was a correction, and it's needed and it's healthy. But if you held on, I'm just making this video to say congratulations, good job, and you're on your way to the top. Okay, it's really natural if a lot of you are panicking. Nobody likes to look at their portfolio and see all red. They don't like to see the stock market going down, all the arrows pointing the wrong direction. We're in this to make money, and you get full of endorphins and you get really excited when you see the green market and your stocks going up, and then something inside of us just, it hurts to watch them going down, and you think you're losing your money and it's going to be gone forever. And I explained this, a million times to you. Unless the company's going out of business, something catastrophic happens, you're going to be all right. If you investigated the company, researched the company, did your analysis on the company, and you did your due diligence, you're going to be fine. That's why I want everyone to do their due diligence. I want them to look into the company, the CEO, the financials, last year's financials, next year's financials. Now, if you can get a hold of reports, bonuses, Christmas bonuses, were they raised, were they decreased? You want to see insiders buying. You want to look and see if insiders are buying into the company. That's a huge sign that they believe in the company that you're invested in. So there's a lot of key points to look for when you're investing in a company, and I try to track them all down and then go over them twice just in case I missed one. And then you don't have to feel too bad. You can see on the screen here, my portfolio went down $12,800 the last week. And yeah, it's something you don't want to see, but it could be worse. It could have been a real market crash. Could have started a war or something like that, and things could have went haywire for a while. But even then, the S&P, the Dow, the stock market has a way of fighting back. And it also takes turns. It goes around in sectors. It'll go to growth sectors, it'll go to business sectors, tech sectors, and it'll go to healthcare sectors, travel industry, the entertainment industry. There's so many different, stocks and businesses out there to invest in. The stock market kind of makes its rounds, and you'll see there'll be more volume in certain stocks in certain areas in some days, and then some days it'll kind of die off. That's usually when I like to buy the stock, when no one's really looking at it. When there's a lot of traffic, it usually means the price is going to be up there to where you might want to sell, but you definitely don't want to buy. And the only time I sell my stocks is to balance out my portfolio. If I have too much of one, or it ran up way too high, and I think I could sell that and buy 4 new growth stocks that have the same potential, That's how I do it. I hold on to these stocks. I have a lot of long-term stocks that are going to take 3 to 5 years to mature. But when they do, it's going to be 5 or 10 times, you know, the amount of money I paid for it. So all in all, that's what I'm going for, long-term growth. And that's the safest way to play the stock market. You can day trade. You can lose a lot of money really quick. You can make a lot of money really quick, but that's not always the case. Most of the time, if you're new at it and you're day trading, you're going to lose money. Unless you have somebody, you know, giving you hints along the way. But yeah, this is my portfolio, down $12,700, $12,800, even more at times, way down, you know, $39,000 at the lowest peak. And then it comes back up, and then, you know, today it went up 12,800. So I'm right back to even in just 1 week. So instead of freaking out and selling all my stocks, because everything you see over here, these were all in the red last week on both sides. I believe these are different stocks on both of these pages. Yeah, these are all in the red. Now they're all in the green. And some of them are up 10%, 20%, 10%, 10%, 11%, 11%. I mean, 16%, 13, 12%, 16. I mean, you know, the stock market's going to dip. It's going to fluctuate. All in all, if you believe in the company, you shouldn't have to worry about it too much. Here's a S&P the last 5 years. Now, S&P last 5 years, it's had a lot of dips. There's a big dip here, 2016. There's two of them actually, July and November. Now, for some reason, the stock market likes to dip the end of October, early November a lot. I did that last year as well, and I had some great buying opportunities. November 6th, I picked up a bunch of good stocks that even, and the present correction, they're still not down to what I bought them at. So buying on these dips is a beautiful thing, because if you look at the long run, you know, sometimes what goes up must come down, but then it kind of continues back up. And then you'll have some really nasty ones down, like 2018. I mean, you know, it just looked like, you know, the end of the world. And then slowly but surely, you know, by the end of 2019 and beginning 2020, it's up and above where it was when you thought you were on top of the world, and then everything just came crashing down. And then February, you think you're up on top of the world, and then boom, you know, everything went crashing all the way down, and everybody's just they're freaking out there in the COVID last year. And I mean, stock market plunged. And what should have happened is it should have plunged, and it should have had a really slow recovery line after something, you know, that the world's never gone through. And it was the world, not just the United States, not just one country, it was the entire world. Pandemic that was brand new to the world. So this definitely should not have had this huge V-shaped recovery, but it did. And that just shows, you know, how resilient we are and how much the world, you know, wanted to keep on going. And it also shows that the economy's doing pretty good, or was doing pretty good. And we have a little teeny correction here going on right now. I mean, you know, compared to, you know, some of these bigger corrections, it shouldn't be too scary. I know to newer investors, you know, it's hard to look at. And then the Dow Jones, it's very similar. You know, the SP Dow Jones, they're all pretty similar. They all pretty much ride the same highs and lows. But you know, there's one thing that's always there. It's, you know, it's constantly moving in the right direction. Only going to reverse and come down if there's something catastrophic, like, you know, it was when COVID, you know, came out and the world was, you know, just awestruck and in fear. And that's you know, that's expected. But as you can see, you know, it bounced right back, which might have been a little unhealthy because it was way too big of a bounce. But that was because all the EVs coming out, you know, everybody, all the new SPACs. So I mean, this is just, it was huge, huge time in the market. Just growth stocks everywhere, and that's what brought it all the way back up. And this correction that we're seeing right now, I didn't think it was over. We had a green day today, but there could very well be, you know, another month of red days. There's still a lot of things going on in the world, you know, the feds and taxes. We got growth stocks. We got our bonds. There's so many different things fluctuating right now. The price of the bonds, you know, they're raising them up and giving people more money, so it's kind of pulling some money out of the stock market. But all in all, you know, there's no bigger money than in the stock market. There's a little safer money, of course, but you know, you're not going to ever make as much as you are in the stock market with any kind of bonds. That's just the way it is, and that's the way it's always going to be. So the money always finds its way back here, and then you'll see the bank stocks go up. And when people get scared, you know, they'll put their money in the bank, and you'll see all the banks go up and up and up. But that money usually filters its way back into the market when people feel, you know, a little more, you know, less anxious. So the money ends up coming back to the market, and that's where you get these high growth trend lines. But like I said, and you know, just for years and years and years and years, the market's gone up, you know, several percent every year, forever. It's just what it does, and that's the way it's done. It's from the start. So I wouldn't panic sell. Hold on to your stocks. That's the reason that we buy all these stocks that we researched and that we love. All these stocks on this list, I didn't sell a single stock. I balanced a couple of stocks when some didn't drop as much. I sold some and I bought some that did drop more. But that's about all I did. I did some rebalancing, but yeah, I didn't sell any of my stocks. I'm definitely not going to sell at a loss, because that doesn't make any sense. Like I said, all the way right here when it was down $40,000 last week, you know, if you're new to the market, that's going to freak you out, you know, but don't be. Because like I said, a week later, it's just going straight up. And then if you look at the long term, the stock market usually gradually goes upward. Not always. Like I said, we may not be out of this correction yet, but if you held on to your stocks, good job. I'm proud of you. You're going to make money in the stock market. That's what it's all about. Just learning how to play the game. You guys all owe yourselves a big round of applause. And good job. I'm very proud of you guys for holding through this dip. And I hope you put some more money in there and you improved on some of those positions. Because those red days, I mean, those are, you know, as bad as they make you feel, they are the best buying days out there and in the stock market, and you can't pass those up. Anytime you hear anybody hemming and hawing about the stock market, that's when you know it's time to open it up, look at some of your favorite plays, and buy them at a discount. Because as soon as they come back, that's instant money. That's quick money. And you know, if the stock market rebounds already, which I think we're not out of the woods yet, there still might be some red days ahead of us, because we really overly corrected after this virus. But all in all, I think we're heading the right direction, and looking forward to, you know, enjoying this venture with you and making some more videos and making sure I keep those good picks out there and keep your portfolios full of nice green stocks. All right, guys, we're going to stop it here. If there's any ticker symbols you want me to look up for you, anything you want me to help you research, go ahead and leave it in the comments. Don't forget to like and subscribe, hit the bell notifications. You'll be notified when I make these videos. You'll be the first ones to know. Also, you can follow me on Instagram. I put the pics out there first. Anything that I get a hold of, if I can't get to making a video, plus it takes a few hours to make a video anyways and get it uploaded, you can go over there to Instagram. It's all free. Everything offers for free. Just if you could hit the like and subscribe, and then a comment, you know, anything I can help you with, I'm there for you. You know, you can DM me on Instagram. You know, anything you need, if I can help, I'll be more than happy to. Very proud of you guys for holding on to your stocks, and this video is a thank you for watching, and a thank you for listening, and a congratulations for doing what you're supposed to be doing. Stay tuned for the fireworks show at the end of the video. Alright guys, until the next time, don't forget, when you invest in stocks you love, do your due diligence, do your research, and then once you get a hold of that stock and you buy it, hold on tight with Diamond Hands.